Welcome back, everybody, to the Teaching Tax Flow podcast. We know we are your favorite tax-related podcast out there in the ecosphere. So today, episode 137, we are exploring digital assets and how the IRS treats these. So before we do it, as always, let's take a brief moment and thank our episode sponsor.
This episode is sponsored by Wealth Builders Mortgage Group, powered by Movement Mortgage, one of the top mortgage teams in the nation and a powerhouse in the real estate investing world. With over $1.1 billion in closed mortgage volume and more than 3,000 investor deals under their belt, they don't just talk the talk, they walk it. Their team specializes in helping short-term and long-term rental investors scale smart with customized lending strategies. They offer all STR loan products, including second home, investment, non-QM, bank statement, asset-based, and HELOCs. They also offer all primary home loan products too. Whether you're just starting out or expanding an existing portfolio, their unique Path of 10 strategy is designed to help you move from a 9-to-5 job to financial independence. If you're looking for a lending partner who truly understands the investor mindset, visit wealthbuildersmortgagegroup.com and start building your roadmap today.
Hey, everybody, and welcome back to the Teaching Tax Flow podcast. Obviously, as you've seen in the title, read in the show notes, your friend told you, we are here today talking about Digital Assets 101 and how the IRS looks at those, how you're expected to report on those, et cetera, et cetera. Again, I do not have the information. If anybody's watching this and you know this very well, I love being the dumbest guy in the room, which is why we bring the good guests. And I guess we bring Chris Bacuro back too. Welcome to your own show, sir. How are we doing today?
It's great to be back, John. I am stoked about today's topic and our guest. It's one thing to have, and we have some amazing guests come on throughout the last, 130 some episodes here. But it's also great when we have fellow tax professionals come in. And as you know, whenever we bring in a tax professional, it's going to be someone that is at the level that they teach their peers. Because it's one thing to be a tax professional, it's another, when you teach the teachers, then you simply master something. So very excited to have our guest today. This is a topic that, as you know, John, I'm not an expert in, hence why we've been searching for the right person. And I'm so excited to have that guest. We are going to talk about Digital Assets 101, definitely a elevated enforcement level by the IRS. That doesn't mean you should be afraid of them. That doesn't mean you shouldn't be involved with them. But we're going to get right to that. Excited to introduce our guest, Ty Gaines, enrolled agent. She is super respected in our industry, a presenter. If you follow her LinkedIn will be connected to this. She is speaking on a weekly basis and at a regional and national level. But also, fun facts that I found out that she has given back to this profession. She was named Enrolled Agent of the Year by the Virginia Society of Enrolled Agents a few years back. She was also the president of that organization and really involved with the NAEA, which is the National Association of Enrolled Agents. She also was a Mentor of the Year for that organization, has her own tax practice, and is the project manager for TokenTax LLC, which we're going to talk about as well. So honored to have you, Ty. Welcome to the Teaching Tax Flow podcast.
Well, thank you for having me. Every time somebody reads my bio, I'm always like, wow, that girl is awesome. So I guess I'm me.
And
That's
Ty,
cool.
that intro was so long, I feel like I was out of breath as Chris was reading it. I mean, I found myself like,
too, but it's like, dang, that person
That
knows
was
what
a
the heck
nice
they're doing.
little succinct tie-up. I like it.
Yeah.
Sounds great. Thank you.
Oh, one more fun fact, John, for you. Ty is a avid
oh, I know where this is
yogi.
going.
No, she's an avid yoga. She practices yoga, but also she's such a physical specimen. I'm sure she plays pickleball, which I know she does play. And we will organize a game one day.
Absolutely.
And she's gonna get us on the yoga mat, and that's gonna be ugly. We're gonna need some bandages and we're gonna need some ice packs, John.
I have no words. I have
Yeah,
no words for
pickleball's
this.
the thing. You got to play pickleball. It's the whole thing.
Oh
Okay.
yeah.
All right, Ty, we're gonna rearrange your bio and we're gonna have some fun with that here eventually. So just okay. I see where this is going.
Well, let's jump in. I'm sorry, Ty. Yeah, tell us a little bit about yourself. I know I gave you did the introduction, but what led you into becoming a tax professional, and then specifically into working in that niche of digital assets?
So, real quick, I guess I think I've been a tax professional. I've been an enrolled agent since 2007, but I believe I started my first tax season in 2002. So sadly, I can do all complex tax things, but the math on that is really throwing me off. 23 years, I don't know, something like that. I've been preparing taxes. So I think I started digital assets around 2019. So I have been in the tax field for a while and was actually getting a little tired of regular tax. I think the Tax Cuts and Jobs Act had just passed. We had all this new stuff, and then there was something like cryptocurrency, and I'm like, hey, what's that? So I kind of took some classes, some trainings. I actually worked for 2 different startups before I ended up at TokenTax, which was a new startup at the time. We've grown tremendously since then, probably because I worked there. But no, seriously,
Exactly.
it's been it's been a ride. The crypto market has been, as we can talk about as we go, up and down and around. And I personally didn't invest in it until 2020. I want to say I jumped in at COVID when the markets dropped. Is when I invested in like Ethereum and Bitcoin. And if I told you what I paid for them, I want to say Ethereum was like $200 and it's over 2,000 now, which is even
Wow.
low for its standards, but it's over 2,000 now. And then Bitcoin was maybe 6 or 7,000. It's in the 90s now.
Wow.
I wish I could have bought a whole one. I didn't, because that seems so high. Like
Yeah.
$7,000 for a coin seemed ridiculous back then, and now it's
Uh-huh.
almost 100,000, right? Because you're buying stocks. Like I buy Ford, and it's $8, and then you say something like Bitcoin, and it's 8,000. You're like, I'm not buying
Mm-hmm.
that. So you buy parts of cryptocurrency. You don't
Right.
buy the whole thing. Well, unless you're rich. I'm not. But you buy fractions of it. So when you
Right.
buy Bitcoin, you buy 0.0000 whatever of a Bitcoin, and you spend $100 and that's what you get. But yeah, taxes in general, I was a military spouse. We traveled a lot. It's a great thing to travel with. And I ended up building a virtual practice as a result of having to travel as a military spouse. So that's kind of where it started and where it flowed to.
Uh-huh.
So I work remotely still, yet it's more remote because of technology, right? So at first it was like people dropping stuff off at the house, and if you moved, you could keep the clients with you. Now it's all completely virtual. So
Uh-huh.
it's great.
Well, I have a question for you that, and then we'll jump in, I promise. So, a little
Oh, we're
birdie
not in?
told me that you are an alum of the University of Illinois.
Oh,
You're
of course. ILL.
and
There's
you're
many
so
people
I
out
went to
there.
Michigan State, so we got Big Ten going for us. The
Oh, Big
one
Ten.
yes, the one program we don't love on this show is the University of Michigan, but that's all right because John lives
Oh,
outside Ann Arbor. So we're not a big
oh,
Michigan fan here.
oh.
Don't worry,
Um,
people here are pretty used to not being liked, because it's always the popular people and the really good ones. They like to take a lot of heat. It's all good. I
but
didn't go there,
then
so I'm not smart enough.
also you got your I should have mentioned this. You got your master's degree from Troy
Mhm.
University, and guess what? That's not in Troy, Michigan. That's not in Troy, New York. It's in Alabama, right?
It's
Is
in
that
Troy, Alabama.
yeah, that's so we drive through there. I live in Franklin, Tennessee, which is just south of Nashville, 15 miles. So when we go to the beach, we go right through where Troy University is.
Have
So,
you seen the campus? It's the most beautiful campus in the state,
y-
they say, and it is a
Mhm.
really pretty campus. I didn't actually attend on campus. It wasn't until 2 years ago that I actually visited it. I went through the military, it was through the military bases, you
mhm.
could go to the schools long distance learning, I guess back then. It wasn't really remote or online, but they had classes on the bases that were linked to the university. And that's how I attended. But a couple years ago, my son, who's active duty military, Army Apache helicopter, by the way, was in aviation school at Fort Novosel, and it's like 30 minutes from the campus. So we drove through. So I took pictures like I graduated from there in 1999. So I took pictures like 20 years later. Like, yeah, I finally made it
You
to
know
the
what? Once
campus.
TokenTax goes public and you're on the stock exchange, you're gonna ring the bell, and then there's gonna be a Ty Gaines. There's gonna be a statue next to the football stadium by all the
I
stars. So
love it. I love it because we definitely went to the field. I have selfies I can show you of us on the field. That was the whole thing. So yeah.
And we know why Chris has a bit of that campus, because every time he goes to that state, he stops at Buc-ee's for about 2.5
Oh,
hours, and he
oh
and
loves.
no.
That's his favorite
there's a
place.
Buc-ee's 10 minutes from my house here. So
See?
yeah,
U
it's
of M
a,
campus, University of Michigan, and Buc-ee's. Chris would be in absolute paradise.
I'm more of a Wawa or Busy Bee person, but that's all right.
I
We're gonna
love
get-
Wawa. I love Wawa.
Me too. Not a fan of Buc-ee's, but you know what? That's okay. I like to go against the grain a little bit. Just to, Well, let's jump into the digital assets. And a lot of time there's a lot of confusion, right, from taxpayers thinking that they, that how do I report that on my tax return? And let's chat through, like, why do people, I know that the question on the first page of the return, which actually the IRS slipped in there the last few years, right, about digital assets, and then it changed of how you're even supposed to answer that. But tell us about why do people need to report the digital assets on their tax return?
So they are considered property and they hold value. So generally, the IRS wants money for anything you sell that's valuable. It's funny because if you sell something at a yard sale, it has technically decreased in value. So you generally don't have to report that unless you sell
Right.
it on eBay, in which case you do have to report it. But, the decrease in value versus increase is the thing here. And although crypto can increase and decrease, it is similar to a stock where you're buying it as an investment. So your intent when you buy it is to make money, you would hope, right? So because of that, in general, you have to report it. So any sales, anytime you sell it, anytime you trade it or buy it, or guess what? Starbucks accepts it. If you buy coffee at Starbucks and use cryptocurrency to do so, that is a taxable event that you must report on your tax return. Now that's the
Great
crazy thing.
segue, because you nailed it. A lot of times people say, "Well, I just exchanged it. I didn't take it out of my account." Well, just like if you have a brokerage account and your portfolio rebalances and you sell one stock to buy another one, that's
That's
maybe that's going to be
essentially it.
reportable.
It
Hmm.
is. And then it's very close, although not a security like stock, very much like a stock in terms of handling on your tax return. So if in fact you do buy stocks or are familiar with stocks, that process is exactly the same. It's reported on a form 8949 individually. You report if it's short term, which means you've had it for less than a year, or if it's long term, which means you've had it for longer than a year. And that the reason you would do that is because taxes are more favorable for long-term gains versus short-term gains. And
Right.
we can talk about that later. But the point is, you have to report it, and it is generally taxable. If you have a loss, that could help you, but you still have to put that on the tax return.
So let's talk. Yeah, let's talk about that. So we know that, like you said, the digital assets are property. They're not foreign currency. They are reported just like you would sell a mutual fund or a stock. What are some of the best practices for people or taxpayers to keep track of their cost basis? And can they use what kind of methods are available? Because we know with stock and mutual funds, you can do FIFO, LIFO, or specific identification or an average. What would you recommend?
So same with crypto. Specific ID you can choose first in, first out, FIFO, last in, first out, or highest in, first out is the third option, which generally helps people the most, I think, is what most of our clients generally choose because it's more of giving them a choice in I'll sell this lot and not this one and things like that. The let's see, what was the question? Because I got
No, that's
lost
right.
in that.
So,
Well,
yeah, how can they
so
keep track of cost
so
basis?
how do you keep track? So there's a new law that actually says you have to keep track.
Mhm.
Whereas before, even though you should have, many people didn't. So going back to when the 8949 was born in 2010, because a lot of people don't realize that the 8949 for reporting stocks is not that old. I've been doing taxes longer than the 8949 existed. Used to be able to put it on a Schedule D. But now, but back in 2010, there was a law that basically said brokers have to report cost basis and for stocks. And so that's when we start getting the new stock, the 1099B that said code A, short-term covered, code B, short-term not covered. Same thing is happening with crypto. There was a broker bill passed last July, TD 10,000, that basically said brokers are going to have to report cost basis for crypto. They don't know cost basis. So it's your responsibility as a taxpayer to actually keep track of your tax basis, because you're going to actually have to give it to the broker. And when you don't give it to the broker, what happens is they just report the proceeds and you're taxed on the total proceeds, even though you have basis because you paid something for that item. So the best way to track this, obviously, is to use crypto software. And I work for a crypto software company, TokenTax. So we keep track of your assets. We track your basis. If we don't know it, we can look it up. Everything is stored on a blockchain, so we can look for basis. So you can pay professionals any software. I'm going to plug mine because I work there, but you can look crypto software companies. This is what they do. So they all do the same thing where they help you find any missing cost basis. Usually that occurs when people have different exchanges, different wallets, multiple things, and they're like, oh, I bought it from this wallet, I transferred it to this, I don't remember when I bought it. You should keep track of everything. If you're good with Excel, you can probably do it in Excel if you don't have a lot of transactions. But if you do, or you do more complex transactions, you should get crypto software to help you track your base.
That you took my next question from me, because we have to remember, if you're listening to I always say that, John, right? Because you have to be listening. Why do I ask
you're
people
already
if they're listening? They're freaking listening or watching.
We're going to change it to be like, while you're listening.
While you're listening.
And then a cowbell goes off.
The IRS will credit you with zero cost basis. It's your responsibility to track that basis. And quite frankly, you may have bought these assets 4 or 5 years ago. So that's why you need that software. And again, TokenTax is going to be a very big help for you. We're going to put those links in all the notes. But you're responsible, because I can't tell you how many times, and this has happened with other. This happens all the time with the CP 2000s, which is your most common IRS notice. Someone says, "Oh, I sold my Bitcoin." Yeah, why didn't you? Let's say I'm the tax professional. Oh, okay. Well, why didn't you tell me? Because I didn't make no money. And they always say it like that, right? That's okay, but guess what? It's still reportable. And the IRS now is going to say, $10,000 sale, I'm going to assess you short-term capital gain rate with zero basis. You get the crappiest treatment, and it's your responsibility to prove the better treatment. So do that right away and keep track of these things.
Keeping records.
So Ty, you mentioned something that was first question would be so typically that's going to get reported on the 8949. You mentioned the Starbucks example. Let's say someone owns a coffee shop in a hip, cool area, and you accept Bitcoin. How does that get reported? Let's say you're a sole proprietor.
If I'm the sole proprietor,
yes,
accepting it as payment,
yes,
I have to report that as income as well at fair market value upon receipt. So whatever it's worth at the time that I receive it is ordinary income to me as a business owner.
Right. And then let's say you keep it in your wallet or something as in the business, and then subsequently sell it. You might have a gain or loss there, but yeah, and there's actually going to be some real estate transaction done with digital assets coming up. Because think about this: if a lot of your wealth is in digital assets, especially for that younger generation, it's not like you can go to the mortgage company and say, "Hey, I've got all this money in my wallet." You might have to pay cash for a property, well, really cash. And the point is once that digital asset leaves your ownership, it is considered transferred and reportable.
Yes,
you buy
absolutely.
A house, a car, a coffee,
anything.
And you could
actually have a loss on it. You could have paid, $10 for this cryptocurrency, and then it could have decreased in value by the time you sold it. And then you purchase something that wasn't even worth that. Like, it could be that you do lose money. It just doesn't mean that you don't
Yeah.
report it.
I mean, you could very well have a situation. We were talking about this in some of our educational seminars for the tax pros. Let's say you had a young person that bought $5,000 worth of cryptocurrency. It went up to $500,000. They sell
Mhm.
it, pay cash for a house.
Mhm.
They got to remember you've got to pay tax on that. Hopefully, probably a long-term
Yeah.
gain.
Yeah.
So
Long term, hopefully for 5
you
years.
can't rip a
But
shingle off the house and pay the tax, right? You're going to
I
have
mean,
taxable event.
yes, you are. And it people, you're gonna have to pay the tax. You have to put that aside. A part of the problem we have at TokenTax when we're preparing taxes is that the markets go up and down, right? So people file their taxes one year, markets are up. They pay, millions of dollars on taxes. The next year, the bill is due. Guess what? Value went down. They can't pay it. Because you're talking about the difference in we cut off the tax year 12/31 and the value of Bitcoin in 12/31 may have been $100,000. We filed taxes April 15th and it's dropped to $80,000 or less or whatever. We have a loss. The portfolio balance drops and people can't pay the tax liability because you're taxed at the time, the fair market value at the time. Digital assets can be volatile and can up and down as they have been even just this year. And so you can definitely lose money or basically run short. When you were rich last year, you could be poor this year.
It's volatile. That is a great way to put it. Well, Ty, I'm going to wrap this up because I guarantee you we are John's already making some notes over there. It's rare that he's paying attention half the time. No,
I
he's
don't
Because everyone's
that
talking about
doesn't even
pickleball.
work.
Well, we'll work on those skills,
Let him
John.
fly.
We'll get back to it.
But I know we'll have Ty back on. We're gonna entice her to add some content to our YouTube channel. But to wrap it up on this 101, Digital Assets 101, can you give us just a couple minutes on that aforementioned new reporting requirement called a 1099-DA, stands for digital assets. Many people are aware of 1099 NEC, miscellaneous interest dividend. What are the rules with the 1099-DA that are going to be new here for the 2025 tax year, which would be filing in 26 can you leave us with those rules?
So the 1099 DA will be similar to what I was discussing, the stocks 1099B. It's not as cute, it's not as neat, it doesn't look as good, but it reports the same thing. The name of the asset, the date it was purchased, the date it was sold, the cost basis, the sale, that type of information is the information taxpayers will need to have for their tax preparer to put that information on their 8949. So those forms will come out. The problem with them that I see so far is that there may be multiple forms where the 1099B would just say code A, code B, code C, and it would all be on one form. It looks like the digital 1099-DA is set up to put one code per form. So the codes are like G, H, J, K, Y. Yeah, Y. And that's like the unknown one. But when that code is on a form, like there's only spot for one code. So like anything short term could be on one form, and then something long term, even though it's the same stock, will be on a second form. So the problem with that form is that they're killing trees for one. But
Yes.
it could be to where do we have everything because there's multiple pages, and we know in the digital age, clients like to give you page one of something. So as a taxpayer, give all the pages of everything you receive and make sure you receive all pages because this is a new thing. And they don't have to report cost basis in 2025. That was actually pushed to 2026. So a lot of the forms may be missing cost basis, which is another reason taxpayers will need to keep track of that so they can give that information and say, no, this is what I paid for it. And tax professionals will be able to use that basis to help lower any gains.
And that form, I looked at a draft of that form because I don't have a very good social life. But they're asking for short-term, long-term, ordinary. There's a lot of information on that form
It is.
that's going to get really tricky. But I can't thank you enough for joining us here, and I can't wait to have you back and get some more information. Go ahead, Johnny T. I know you're.
Oh, I'm itching, man. I'm sitting in here in my head just playing it back because you're late. You're going off with all those letters that are on that form, and in my head, I'm trying to think of a really dumb way to do like a version of the YMCA, for the village people, where it's like B C F E.
What? Yeah,
Get kind of crazy with it. They're that's why I'm here, right?
Yeah.
The poor comic
Of
relief.
course, that's
But-
why. And I'm here for it, as you can see.
Well, I'm glad you are. We can get rid of everybody else. Chris, you can go. No. Yeah. But honestly, Ty, thank you so much for joining us. And obviously, as Chris had said multiple times too, we're going to have you back on. You don't have a
Awesome.
choice. We're just
Awesome.
going to find you. We'll take the blockchain approach, right? We'll do a little bit at a time, and then we'll get you back. But for
Awesome.
anybody that is listening to this as well, is mentioned a little bit earlier on too, we will drop Ty's contact in the show notes, as well as anywhere you're listening to this. Obviously, subscribe to it. You be on the lookout for some more content we're going to put out. But also, Chris, I don't know if you mentioned it, but if you did, awesome. I'll say it again. Hop on the YouTube channel. If you're watching this on YouTube, awesome. Don't be lazy. Hit the subscribe button. It's somewhere, in the YM. Now we'll do like the Madonna
I
Vogue deal here.
subscribed. I found it. So
Good,
it's there.
good. You can come back then. You can come back. But yes, anybody that's listening to this, reach out to us. Reach out to anybody, your tax pro, anybody you have in your proverbial Rolodex, and they will help you out. This is something you do not want to tackle necessarily by yourself. But if you do a little bit of a DIY with this, hopefully this helped you along the way. So as always, we will see you back here again next week. Same day of the week, different date, completely different topic. Have a good week, everybody.
The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Cabin Advisors, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer. The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine the risk factors and other information contained in the memorandum.